Hey everyone, welcome back to Corporate Decoder. Today we're diving into Fidelity National Financial's latest proxy statement, and trust me, it's more than just a snooze fest of corporate jargon. This document is essentially a shareholder's manual. We'll decode what's happening behind the scenes. Think of it as a sneak peek into the company's roadmap and some potential potholes along the way. This proxy is a formal invitation. The board wants your vote on some key decisions at the annual meeting in June. They are laying out everything from who should be on the board to a significant move for the company. First things first, you will be voting on electing 3 directors to the board. These are Class 2 directors, which means they will serve until 2028, assuming they get elected. One of the biggest decisions on the table is a proposal to move the company's legal home, so to speak, from Delaware to Nevada. This is called redomestication or reincorporation and is done by conversion, like changing from one legal entity to another. There's also a shareholder proposal to vote on whether each director should be elected every year versus the current system. You'll also get a say on pay vote, which means you get to give your opinion on how the top executives are being compensated, what they are being paid. Finally, shareholders will ratify the decision to keep Ernst & Young LLP as their accounting firm to make sure they are in agreement. The board is very clear on what they want. They urge you to vote for their director picks and for moving to Nevada, as well as for the advisory vote on pay and for keeping Ernst & Young. The board is taking no position with regards to the proposal to elect each director annually. So what exactly does Fidelity National Financial, or FNF, do? They are a big player in title insurance, those policies that protect your property rights. They also offer technology and services for real estate deals and sell annuity and life insurance products. The proxy materials talk about their history of strong performance even in tough markets, plus their focus on both customers and shareholders. Scroll key 2024 sustainability. As you see, Accomplishment Scrolls, the company, also highlights its sustainability efforts. They've invested in technology to measure their environmental impact, revise policies to address sustainability risks, and conduct a climate risk assessment. They also have a sustainability risk management overseen by the Chief Risk Officer and the Audit Committee. That's important because it means someone is keeping an eye on things and reporting directly to the board. Cybersecurity is also a big deal, with the Audit Committee providing oversight and management reporting regularly about cyber and data security issues. They even have employees attend third-party director education courses on cybersecurity. They want a mix of skills, experience, and diversity on the board to help them make better decisions. They value having some directors with long experience at the company, but they also want fresh perspectives. It sounds like they are striking a balance between experience and new ideas. They have proxy access, which allows shareholders to nominate their own director candidates in certain situations. Now, let's meet the people you'll be voting for. It can scroll. Alim Danidina, Iduayanan, Danidina, Daniel D. Lane, Camille Tamiria, Thompson, and Antonina Daniel D. Lane, and Carrie H. Thompson. Scroll Apostle Node. To approval, offer a domestic scroll. Why are they moving to Nevada? The board says it's for a few key reasons. First, financial benefits and cost savings. Nevada has lower taxes and insurance costs. For example, Delaware franchise taxes cost $250,000. Nevada fees are more like $1,000. There is also a desire to preserve certain shareholder rights, and Nevada courts have more predictability in decision making. Nevada judges look at the statutes to decide things, not really just legal interpretations. The main reasons, as the company sees it, for the reincorporation proposal: Nevada provides a more predictable legal framework, reduces risk of opportunistic litigation, and the significant company operations are based in the West region, operating out of Nevada. The redomestication also gives stockholders a few more rights and benefits. Nevada charter limits liability but protects duty of loyalty and good faith. It bans reverse stock splits without stockholder approval and gives the stockholders more power to call special meetings. The proxy tries to downplay some concerns by saying that even though Nevada courts are more statute-based, Nevada courts may look to Delaware law for guidance. Nevada is home to a big chunk of the business, plus several top execs and board members live there. And Nevada offers potentially greater protections for directors and officers from liability, which they think will attract more qualified people. We expect an estimated $250,000 annual savings in state franchise taxes, because Delaware annual franchise tax has a minimum threshold of $250,000. The move won't affect how the stock is traded or your position as a shareholder. Even with all this considered, the board recommends that stockholders vote for this important proposal. This proposal wants the company to take the necessary steps to make sure every director is up for election each year. This has become a popular movement. People like Arthur Levitt, former chairman of the Securities and Exchange Commission, says it is best for investors if the entire board is elected once a year. Time to talk about money, executive compensation. The goal is to tie pay to performance and to motivate executives to grow the company, while also keeping them from taking too many risks. It also helps attract and retain top talent. Okay, let's dive into some numbers. FNF generated $13.7 billion in revenue and $139 billion in net earnings in 2024. They want you to know these results came during a challenging mortgage market. Their title business generated $7.7 billion in revenue with a 15.1% adjusted pre-tax title margin. That's a pretty important number for a title company. This shows they managed their operations efficiently despite one of the most challenging mortgage environments in 3 decades. Their F&G segment, that insurance piece, also saw record gross sales of $15.3 billion. Revenue excluding some valuation losses look like this: roughly $10 billion, $16 billion, almost $16 billion, $16 billion, $12.5 billion in 2022, then 11 2024. So there was growth overall in the last 5 years. The proxy statement has a lot of legalese about the details of how the board plans to use various types of company stock for compensation of different levels. The audit committee says Ernst & Young should be good as their independent accounting firm, but it is up to you to either ratify or deny them. The Compensation Committee vouches for the discussion about compensation and recommends that the board use the information. You can find their proxy statement for 2025 and annual report for 2024 online. Tick kind. So what's my take on all this? FNF has some things going for it. As seasoned management, they are able to turn a decent profit even when the markets are tough. They're also diversifying into areas like annuities. The Nevada move seems like it could save them some money and provide more legal certainty, but it's not a slam dunk, as evidenced by the shareholder vote. And then you have the question of governance, which the board is taking no stand on. One potential concern is that they may be heavily reliant on William Foley. He's had the wheel for 4 decades, but at some point that has to change. Their strong results still are very good news for investors. As always, do your own digging before making any investment decisions. If you enjoyed this video, please like, subscribe, and hit that notification bell so you can learn the next time some business mumbo jumbo comes out.